Question 1. Legal and regulatory framework. Under the Wyoming Captive Insurance Act, what is the primary role of the Wyoming Division of Insurance in regulating captive insurance companies? A. To approve policyholder claims and negotiate settlements. B. To issue licenses, ensure compliance with regulations, and monitor solvency. C. To market Wyoming captives to international investors. D. To provide direct financial support to captive insurance companies. Answer. B. Explanation. The Wyoming Division of Insurance is tasked with ensuring that captive insurance companies operate within the legal and regulatory framework established by the Wyoming Captive Insurance Act. Its primary responsibilities include issuing licenses, ensuring that only qualified applicants establish and operate captives in Wyoming, ensuring compliance, monitoring adherence to state laws including solvency and reporting requirements, monitoring solvency, protecting policyholders by ensuring that captive insurers have adequate financial resources to meet obligations. Options A, C, and D are incorrect because they describe functions not typically performed by state insurance regulators. For example, regulators do not negotiate settlements. They act as marketers. C, or provide direct financial support. D. Question 2. Scenario-based question. Formation of captive insurance companies. Emily Corporation, a multi-state manufacturing firm, is considering forming a single-parent captive in Wyoming to manage its risks. The CFO, Mr. Adams, is concerned about meeting Wyoming's financial requirements. He asks whether the captive needs to maintain reserves for potential claims. What should Mr. Adams prioritize to comply with Wyoming regulations? A. Establishing reserves sufficient to cover expected claims as determined by an actuary. B. Paying a one-time fee to waive reserve requirements. C. Ensuring the captive maintains double the state's minimum capitalization requirement. D. Outsourcing claims handling to a third-party administrator to avoid reserves. Answer. A. Explanation. Under Wyoming regulations, captive insurance companies must establish reserves to cover expected claims and losses. These reserves are typically calculated with actuarial guidance to ensure financial soundness and compliance with state solvency standards. Option A is correct because it aligns with regulatory requirements to safeguard policyholders and the captive's financial stability. Option B is incorrect as reserve requirements cannot be waived with a payment. Option C misrepresents capitalization requirements, which are separate from reserves. Option D is incorrect because outsourcing claims handling does not exempt a captive from maintaining reserves. Question 3. Risk management in captive insurance. Which of the following is a key advantage of using a captive insurance company for enterprise risk management? A. Eliminating the need for reinsurance. B. Enhancing control over claims and underwriting processes. C. Avoiding compliance with federal and state regulations. D. Reducing operational risks unrelated to insurance. Answer. B. Explanation. Captive insurance companies allow organizations to gain greater control over underwriting standards, premium pricing, and claims handling, which is a significant advantage in enterprise risk management. This customization aligns with the parent company's risk tolerance and financial goals. Option A is incorrect because captives often use reinsurance to manage risk efficiently. Option C is incorrect as captives must comply with regulatory requirements at both the state and federal levels. Option D is incorrect because captives focus on managing insurance-related risks, not general operational risks. By centralizing risk management within a captive, companies enhance financial predictability and reduce reliance on traditional insurance markets. Question 4. Taxation of captive insurance. Which of the following statements best describes the taxation treatment for premiums paid to a Wyoming captive insurance company under IRS guidelines? A. Premiums are always fully tax deductible if paid to a captive. B. Premiums are tax deductible only if the captive qualifies as a bona fide insurance company under IRS standards. C. Premiums paid to a captive are never tax deductible. D. Premiums are only deductible if the captive is located outside the United States. Answer. B. Explanation. Under IRS guidelines, premiums paid to a captive are tax deductible only if the captive meets the criteria of a bona fide insurance company. These criteria include risk distribution, risk shifting, and operational independence. Option A is incorrect because deductibility is conditional, not automatic. Option C is incorrect as captives can achieve deductibility under the right circumstances. Option D is incorrect because the captive's location is not the determining factor. Compliance with Internal Revenue Code Section 8 831. B is critical for favorable tax treatment, and misclassification can result in audits and penalties. Question 5. Scenario-based question. Claims and dispute resolution. Mr. Singh manages a Wyoming captive for a regional healthcare provider. A claim for $1 million is filed against the captive by a policyholder. The captive disputes the claim amount and offers to mediate. The policyholder insists on arbitration as per the policy terms. What should Mr. Singh do in this situation? A. Proceed with mediation since it is less expensive. B. Submit to arbitration as it is required under the policy. C. Deny the claim entirely to avoid further costs. D. Negotiate a settlement directly with the policyholder outside the policy terms. Answer. B. Explanation. If the policy specifies arbitration as the dispute resolution method, Mr. Singh must follow this requirement. Arbitration clauses in insurance contracts are legally binding and ensure disputes are resolved in a structured and enforceable manner. Option A is incorrect because mediation cannot override the policy's arbitration clause. Option C is not viable because denying a valid claim without justification could lead to legal and regulatory penalties. Option D bypasses the policy terms and could create compliance issues. This situation emphasizes the importance of understanding policy-specific dispute resolution mechanisms. Question 6. Formation of captive insurance companies. What is a critical component of the feasibility study required for forming a captive insurance company in Wyoming? A. A detailed marketing plan to attract new customers. B. An actuarial analysis of expected claims and financial projections. C. A plan for outsourcing all administrative functions. D. A strategy to minimize compliance with state regulations. Answer. B. Explanation. Feasibility studies are vital for demonstrating the captive's ability to sustain its financial and operational commitments. An actuarial analysis ensures the company's capitalization and premium levels are sufficient to cover potential claims and operating costs. Option A is irrelevant as captives do not typically engage in customer acquisition. Option C may be part of the operational plan but is not the focus of a feasibility study. Option D is incorrect and would conflict with regulatory obligations. Wyoming regulations require thorough feasibility studies to protect policyholders and maintain market integrity. Question 7. Risk management in captive insurance. How does using a captive insurance company help manage emerging risks, such as cyber liability? A. By eliminating the need for reinsurance for such risks. B. By allowing customized policies tailored to the parent company's specific exposures. C. By requiring the parent company to purchase additional commercial policies. D. By avoiding compliance with traditional insurance regulations. Answer. B. Explanation. Captive insurance companies provide flexibility to design coverage for emerging risks, such as cyber liability, that may not be adequately addressed by traditional insurers. Its customization aligns with the company's risk management strategy. Option A is incorrect because captives often leverage reinsurance to share or mitigate risks. Option C mischaracterizes the role of captives, which aim to reduce dependency on commercial policies. Option D is incorrect as captives must comply with applicable regulations. Captives offer innovative solutions for non-traditional and complex risks, enhancing the company's ability to respond to evolving challenges. Question 8. Legal and regulatory framework. What is one of the key requirements for maintaining compliance with Wyoming's annual reporting for captives? A. Filing monthly financial statements. B. Submitting an audited financial statement and actuarial opinion annually. C. Providing detailed policyholder surveys to regulators. D. Reporting claims data to the National Association of Insurance Commissioners (NAIC) quarterly. Answer. B. Explanation. Wyoming requires captive insurers to submit an audited financial statement and an actuarial opinion each year. These documents ensure the captive remains solvent and adheres to regulatory standards. Option A is incorrect because monthly reporting is not typically required. Option C is irrelevant to regulatory compliance. Option D is incorrect as claims data reporting is not mandated quarterly for captives. These requirements protect policyholders and promote financial transparency. Question 9. Reinsurance and risk financing. Which of the following is a benefit of using reinsurance in a Wyoming captive insurance program? A. It guarantees profitability for the captive. B. It transfers significant risk to a third-party reinsurer, reducing the captive's exposure. C. It eliminates the need for capital reserves. D. It removes the captive from Wyoming's regulatory jurisdiction. Answer B. Explanation. Reinsurance enables captives to manage large or unpredictable risks by transferring a portion of their liabilities to reinsurers. This approach stabilizes the captive's financial performance and protects against catastrophic losses. Option A is incorrect because reinsurance does not ensure profitability. Option C is incorrect as reserves are still required. Option D is a misconception of reinsurance does not alter regulatory oversight. Reinsurance is a critical tool for captives to balance risk and maintain financial stability. Question 10. Management and governance of captive insurance companies. What is a key responsibility of the board of directors for a Wyoming captive insurance company? A. Ensuring compliance with state regulations and overseeing risk management strategies. B. Directly managing day-to-day operations and underwriting decisions. C. Negotiating reinsurance contracts with no external input. D. Eliminating the need for third-party service providers. Answer A. Explanation. The board of directors is responsible for setting strategic goals, ensuring regulatory compliance, and overseeing the captive's risk management framework. This includes monitoring solvency and aligning operations with the company's objectives. Option B is incorrect as daily operations are typically managed by executives or service providers. Option C is partially true but requires broader collaboration. Option D misrepresents the value of third-party expertise in captive operations. Effective governance is crucial for maintaining trust and achieving long-term success. Question 11. Purpose of captive insurance. Why might a company choose to form a captive insurance company in Wyoming instead of purchasing traditional commercial insurance? A. To eliminate all regulatory oversight. B. To customize insurance coverage to address unique risks. C. To avoid paying claims to third parties. D. To reduce risk retention. Answer B. Explanation. Captive insurance allows companies to tailor policies to fit specific risks that may not be adequately covered by traditional insurance products. This flexibility can also result in cost savings and improved risk management. Option A is incorrect because captives are still regulated, even in business-friendly jurisdictions like Wyoming. Option C is a misrepresentation in captives pay valid claims to insureds. Option D is incorrect as captives often involve higher risk retention. Question 12. Types of captives. Which type of captive insurance company is designed to insure risks for a group of unrelated companies? A. Single parent captive. B. Group captive. C. Renter-captive. D. Sponsored captive. Answer B. Explanation. A group captive is owned and operated by multiple unrelated entities to provide insurance coverage for common risks. Option A is incorrect because single-parent captives serve only their parent company. Option C is incorrect because renter-captives provide access to captive benefits without ownership. Option D is a variation but is not specifically designed for unrelated groups. Question 13. Wyoming captive tax advantages. What is one significant tax advantage of establishing a captive insurance company in Wyoming? A. No taxes on reinsurance premiums ceded. B. No premium tax obligations. C. Lower corporate income tax rates. D. Exemption from all federal taxes. Answer A. Explanation. Wyoming provides a favorable tax environment for captives, including exemptions from taxes on reinsurance premiums ceded, encouraging risk management strategies involving reinsurance. Option B is incorrect as some premium tax may apply, but is generally minimal. Option C is irrelevant since Wyoming has no state income tax. Option D is false if federal tax obligations still apply under IRS regulations. Question 14. Capital requirements for captives. What is the minimum capital requirement for forming a captive insurance company in Wyoming? A. $100,000 for pure captives. B. $1 million for group captives. C. $250,000 for sponsored captives. D. All of the above, depending on the type of captive. Answer D. Explanation. Wyoming mandates different minimum capital requirements depending on the type of captive. Pure captives, $100,000 group captives, $1 million sponsored captives, $250,000. These requirements ensure financial solvency and the ability to pay claims. Question 15. Use of actuarial services in captives. Why is an actuarial opinion required for Wyoming captive insurance companies? A. To estimate future investment income. B. To verify reserve adequacy and ensure solvency. C. To determine premium tax liabilities. D. To evaluate employee satisfaction with the captive. Answer B. Explanation. An actuarial opinion is critical to confirming the adequacy of reserves, which ensures the captive can meet its obligations. Option A is unrelated to actuarial opinions. Option C is incorrect because actuarial work focuses on risk, not taxes. Option D is irrelevant to regulatory compliance. Question 16. Claims handling in captives. Which is a best practice for claims handling in a Wyoming captive insurance company? A. Outsource all claims to third-party administrators. B. Establish clear procedures and monitor claims activity regularly. C. Refuse large claims to preserve the captive's capital. D. Handle claims informally to avoid regulatory scrutiny. Answer B. Explanation. Captives benefit from having clear claims procedures and oversight to ensure prompt and fair resolutions while maintaining regulatory compliance. Option A is an option but not a comprehensive strategy. Option C is unethical and likely illegal. Option D is contrary to good governance. Question 17. Risk retention. What is the primary reason captives retain more risk than traditional insurers? A. To comply with NAIC guidelines. B. To control claims payouts and reduce premiums. C. To meet state tax obligations. D. To eliminate the need for reinsurance. Answer B. Explanation. Captives often retain more risk to lower insurance premiums and exercise greater control over claims, fostering cost efficiency. Option A is incorrect. Risk retention is not directly tied to NAIC rules. Option C is unrelated to risk retention. Option D is incorrect. Captives may still utilize reinsurance. Question 18. Captive audit requirements. Who typically conducts the required annual audit for a Wyoming captive insurance company? A. The company's CFO. B. A licensed independent CPA. C. The Wyoming Department of Insurance. D. A representative of the parent company. Answer B. Explanation. Wyoming requires captives to have their financials audited by an independent CPA to ensure impartiality and accuracy. Option A is incorrect because internal audits lack independence. Option C is incorrect as the department reviews but does not perform audits. Option D is a conflict of interest. Question 19. Redomestication. If a captive insurance company chooses to redomesticate to Wyoming, what is required? A. Full reapplication under Wyoming laws. B. Submission of a redomestication plan and regulatory approval. C. Immediate payment of all outstanding federal taxes. D. Filing for bankruptcy before transferring. Answer B. Explanation. Captives must submit a redomestication plan outlining compliance with Wyoming regulations, and approval is required from the Department of Insurance. Option A is incorrect as redomestication does not require a full reapplication. Option C is unrelated to the process. Option D is false and irrelevant. Question 20. Investment management for captives. How can Wyoming captives optimize their investment strategy? A. Invest exclusively in high-risk ventures. B. Align investments with the company's risk appetite and liability profile. C. Avoid all investments to preserve capital. D. Focus only on real estate holdings. Answer B. Explanation. Captive investment strategies should match the company's risk tolerance and future liability needs, ensuring adequate funds for claims. Option A is irresponsible. Option C ignores the potential for income generation. Option D is overly narrow. Question 21. Captive regulation in Wyoming. Which entity oversees the regulation of captive insurance companies in Wyoming? A. Wyoming Department of Revenue. B. Wyoming Department of Insurance. C. National Association of Insurance Commissioners, NAIC. D. Federal Insurance Office. Answer B. Explanation. The Wyoming Department of Insurance regulates captive insurance companies, ensuring compliance with state laws and promoting financial solvency. Option A is incorrect because the Department of Revenue focuses on taxation, not insurance regulation. Option C provides guidance but does not directly regulate captives. Option D focuses on federal-level insurance matters, not captives. Question 22. Reinsurance benefits for captives. Why might a Wyoming captive use reinsurance? A. To eliminate the need for actuarial opinions. B. To reduce financial exposure and share risk. C. To replace its primary insurance coverage. D. To increase premium tax liabilities. Answer B. Explanation. Reinsurance allows captives to transfer portions of their risk to other insurers, reducing financial exposure and increasing stability. Option A is incorrect. The actuarial opinions are still required. Option C misunderstands the role of reinsurance. Option D is false. Reinsurance can reduce costs, not increase taxes. Question 23. Advantages of Wyoming captive legislation. What is one feature of Wyoming's captive insurance legislation that attracts companies? A. Requirement to disclose all claims publicly. B. Favorable premium tax rates and flexible regulations. C. Prohibition of reinsurance agreements. D. Strict investment limitations. Answer B. Explanation. Wyoming offers attractive features like low premium taxes, efficient regulatory processes, and flexibility in structuring captives. Option A is a deterrent, not an advantage. Option C is false. Reinsurance is allowed and encouraged. Option D is incorrect. Wyoming's regulations are flexible. Question 24. Types of coverage in captives. Which type of insurance coverage is least likely to be provided by a Wyoming captive? A. Cyber liability insurance. B. Workers' compensation insurance. C. Property insurance. D. National flood insurance. Answer D. Explanation. National flood insurance is typically managed through government programs like the NFIP, not captives. Captives often provide customizable coverages like cyber liability, property, and workers' compensation. Question 25. Risk pooling in captives. How do group captives benefit from risk pooling? A. By avoiding claims entirely. B. By spreading risks among multiple members. C. By eliminating the need for capital reserves. D. By requiring only one member to pay premiums. Answer B. Explanation. Group captives use risk pooling to spread the financial impact of claims among all members, reducing individual exposure. Option A is incorrect. Claims are managed, not avoided. Option C is false. Reserves are still needed. Option D misrepresents how group captives operate. Question 26. Economic benefits of captives. Which economic benefit is commonly associated with forming a captive in Wyoming? A. Reduced claims payments to policyholders. B. Enhanced cash flow and investment income. C. Avoidance of all state and federal taxes. D. Elimination of underwriting risks. Answer B. Explanation. Captives can generate investment income on retained premiums, improving cash flow and providing economic benefits for the parent company. Option A is false. The claims payments remain a responsibility. Option C is inaccurate and taxes still apply. Option D is incorrect. Underwriting risks are managed, not eliminated. Question 27. Captive feasibility study. What is the purpose of conducting a feasibility study before forming a captive? A. To obtain regulatory approval without financial details. B. To assess the viability and financial benefits of a captive. C. To finalize investment strategies for the captive. D. To determine the parent company's corporate structure. Answer B. Explanation. A feasibility study evaluates whether a captive is a practical and beneficial option by analyzing risks, financial projections, and regulatory requirements. Option A is incorrect because regulators require comprehensive financial details. Option C is premature without a feasibility analysis. Option D is unrelated to the study's purpose. Question 20. Captive exit strategies. What is one possible exit strategy for a Wyoming captive insurance company? A. Immediate liquidation without regulatory approval. B. Conversion to mutual insurance company. C. Redomestication to another state or jurisdiction. D. Selling policies to unauthorized insurers. Answer C. Explanation. Captives may redomesticate to another jurisdiction if it aligns better with their goals or regulatory needs. Option A is illegal. Liquidation requires regulatory oversight. Option B is uncommon and highly complex. Option D is prohibited and unethical. Question 29. Role of the captive manager. What is the primary role of a captive manager? A. To eliminate the need for regulatory reporting. B. To oversee daily operations and ensure compliance. C. To reduce claims costs by denying coverage. D. To handle all actuarial calculations directly. Answer B. Explanation. Captive managers handle operations, regulatory filings, and compliance, ensuring the smooth functioning of the captive. Option A is incorrect. Reporting is mandatory. Option C is unethical. Option D may be outsourced to actuaries. Question 30. Wyoming captive application process. Which of the following is required when applying to form a captive insurance company in Wyoming? A. Filing a feasibility study with the Department of Insurance. B. Providing evidence of federal tax exemptions. C. Hiring Wyoming-based employees exclusively. D. Submitting only verbal commitments from stakeholders. Answer A. Explanation. A feasibility study is crucial to demonstrate the financial soundness and necessity of forming the captive. Option B is incorrect. Federal tax exemptions are irrelevant at this stage. Option C is not a requirement in Wyoming. Option D is inadequate for regulatory approval.